Good afternoon, everybody. Just want to do this before Meta's out. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, member of FINRA. While my trades are placed through T3 Trading Group, you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same as yesterday, except I have a little bit of Google. Small. Real small. All right, we're waiting on Meta. Meta just did this big downtick here after hours, but it doesn't appear to be out. Snap did the same thing yesterday. Snap dropped like $1 yesterday before the number actually hit, and then snapped back a little bit, pun intended, and then went all the way up when the report actually hit. It's very weird. It's like the algorithms go a little crazy and it starts selling and everybody else starts selling. So it's the same exact thing in Snap. I've seen that happen over the years, but it's pretty rare. Pretty rare to be 2 days in a row. It wasn't really trading like it was out. Oh yeah, we're waiting on IBM also. IBM is out. IBM with a beat on revenue. Beat on EPS. Yeah, numbers look good. Fiscal year revenue constant. Okay. Free cash flow. Free cash flow beats. The IBM numbers are good. IBM trading up a little bit. A little unexciting, like usual. We're still waiting on Meta. Meta's still down $4.50 from where it closed, despite the fact that the report isn't out yet. Let's see if it hits here at 10 after. 2 seconds. Nope. Come on, Zuckerberg, where are you?
It's training. It's teaching.
Be all good, D. You got the Zimbabwe guys looking over you, bro.
It's service now. Not really moving too much. And lights like got up for now. Oh, now it's trading up now. Now. I'm losing my mind. It's been a long day. The new low.
With the new low.
I learned that the Afrikaans say now or now, and they mean two different things. Wow, so Meta snapped back $10 all before the number is hit. This is the exact same thing that Snap did. I'm almost 10 cents away from getting filled on the bid in that down move in Snap yesterday. And then it went all the way up to 12.
What is that vibrate?
I really need this Meta to go up here.
Okay, I just didn't know.
The market needs this. Market needs Zuckerberg to come through right now in a big way. I'm surprised this report's not out yet. Yeah. There were still sellers.
Do you think that's Google set the pace?
What?
Do you think that's Google set the pace? Is Facebook coming out with earnings?
Facebook should be out,
Right.
And I'm surprised it's not out yet.
Typically, that it's not doing well right now.
Yeah, I mean, I know. Actually, I have no idea why everything sold off the way it did today, especially Amazon. I have no idea why Amazon is down 6% today, when the Microsoft Cloud numbers were pretty good, and Google was a little bit of a miss. But I don't think that justifies a 6% Amazon sell-off. I still think it's a rate story today. But the good market was just looking for a reason to sell. This weakness today was absolutely brutal. Sean? I wish. Oh, that was Steve. No, yeah, that was Steve. Our wonderful chief of compliance, always keeping an eye on all you guys, making sure that none of you guys are breaking the rules. Make sure that you all did your annual affirmations. Make sure that you did your. I got 2 compliance officers breathing down my neck.
Oh, we got 2 compliance officers here. Chief.
Make sure you're declaring all your outside business activity. Outside brokerage accounts need to be properly disclosed.
If this whole thing doesn't work out, you gotta clear.
Make sure you did your cybersecurity video.
You have board already?
Just in case it hits a new low.
A new low. All right, let's see if this meta here hits at 4:15 in 30 seconds.
And then I'll go and I'll edit. It's fun because like you'll see there'll be.
I've never seen them flash a stock down. $300 stock.
That was a big flash down.
Somebody was just like, I want out before the report.
And the robots followed it. It was super orderly.
Yeah, it was whack.
All right, let's see here. 5 seconds. Nothing?
It's gonna come out at 4:20.
It's bizarre.
4:20s.
Isn't Meta always 10 minutes after?
It's always 4:05. I don't know what the hell. I don't know.
So it was 4:05? I thought it was usually 10 after. I don't know, this is bizarre. I could have done the whole afternoon meeting by now.
Oh, on the inside offer on it. Nope.
Yeah, it's a different time zone in the metaverse.
Trimmed whatever Amazon I bought on that dip.
I don't know what I should do. I really want to see this meta come out. I don't want to be interrupting my thoughts on the afternoon meeting when it hits, but at the same time, I don't want to be wasting everyone's time here either. So if you're bored and you're on the YouTube, hit the thumbs up button.
Subscribe now.
Oh, there we go. There we go.
There we
out.
go. Now it's out. Come on, fill me Amazon. Yes. There we go.
Out and up. I don't see numbers yet. Back down.
Oh, what was that?
Now we're down.
I just got the sickest deal on Amazon. I love this business. What the fuck was that?
So guidance Q4 revenue looks like it's kind of in line. Reality Labs, of course, it's Reality Labs is a mess. Daily active users, very small beat. Facebook daily active users. Meta Platforms Q3 revenue beats. It's Reality Labs loss. That looks better than expected. The operating loss of 3.75 billion. That's such a crazy number. We're back up here. It's burning $4 billion. Users beats a little bit, kind of in line, I guess. This looks like a very in line-ish number, maybe a little bit of a beat. Q4 revenue range is broadly in line. But for whatever, we're trading up for whatever reason. Excuse me. Meta 2024 Reality Labs operating losses set to rise meaningfully. Market loves it. I don't get it. The Q's trading up. Yeah, I think the bar is pretty low coming into this report, given what it did. All Meta did thus far is erase the day's sell-off. Now, if all these other stocks I'm in could erase the day's sell-off, we'd be talking. All right, curious to see where this thing settles, but the initial tick is higher. I'm not trading it.
Yo, that CapEx spending, 30 to 35 versus 27. They're gonna spend an extra $8 billion.
You know, the amount that Meta is spending, and if you remember, it's that Meta spending on Reality Labs that brought this thing down to $100 to begin with. I sold a little Amazon at 123.
Why is NVIDIA selling off so hard on this number? I don't understand what's wrong with it.
NVIDIA's selling? I don't get it.
It's down $7 on the close.
I just don't understand how stock markets work anymore. I don't think. I used to understand. Now I don't understand. I used to sort of sometimes understand. I don't understand why Amazon was down today. I don't really understand why Meta's up as much as it is, but I don't understand why Meta was down as much as it was during the day. No idea why NVIDIA is selling after hours. Would anyone else like to do the afternoon meeting who may be more qualified? Clack's up. Meta sees 2024 total expenses. Okay, I mean that's still in the range. 94 billion to 99 billion. Estimate 96.5.
Oh, it's the CapEx. Because the CapEx is lower than expected, NVIDIA's getting hit on that. Because obviously they would expect that spending to go to NVIDIA.
Meta sees growth in payroll expenses in 2024.
Someone smarter than me told me that.
Meta says it's contesting FTC matter of added restrictions.
It's also interesting that they expect to see a growth in payroll expenses.
Yeah.
Considering where we're at and everything going on in the job market, that's an interesting.
All right, so Meta at this point has erased most of the intraday loss. But basically what that means is if Meta was flat all day, it would be trading like unchanged after hours. Amazon upticked a little bit, it came back down. Apple not doing anything. All right, we'll keep an eye on this Meta out of the corner of our eye. If this thing could really start clearing like 313, I think that might be pretty positive. I know the initial tick was a bit higher than that. Trading at 312 right now. So we'll keep an eye on this meta. And we'll do our meeting. So SPYs are up. SPYs are up almost $1 after hours. And yet we're still down 1.25% on a day. It shows you how bad that is. The Qs are up after hours as well, obviously, by also maybe $1 or a little bit less, and they're still down 2.25%. Today was a bloodbath. 2.25% down on the Qs, and the IWM is also up slightly after hours, and it's still down 1.5%. An absolute bloodbath. 2.25% down day for the Nasdaq. SPYs lost a major support level of 420, which we spent a lot of time talking about. And what can save it? Earnings, maybe. Meta's a start. Meta above 313 now. But this market today was absolutely brutal, and I can't put my finger on why, honestly, directly. Obviously, we've been in a weak market to begin with, and Cold Smoke Brian here in the VTF was very right when he was saying that the last couple of days were just an oversold bounce of what's been a weak market recently that got us back to near the ADMA. The Qs got back to the ADMA specifically as of yesterday's high, and that creates a potential lower high to break down off of if the short-term downtrend is going to continue. And, you know, if you want to try to point to a reason, first of all, sometimes there's not always a perfect reason, but you can point to the fact that we've already been in a downtrend. I still think it's a story of these rates a little bit. I know the TLT did not make new lows on the month or anything, but the TLT was certainly down today. So they seem to sell off tech and growth assets. And, you know, the thing that I've struggled with a little bit is the Google-Microsoft earnings, the idea that the Google-Microsoft earnings reports caused a sell-off in the entire NASDAQ. It could just be this broader, you know, risk liquidation that kind of came post these earnings reports in conjunction with the dollar being strong today and TLT being weak. But I can't for the life of me understand why Amazon would be down 6% today. It's up here after hours a little bit on Meta. But I can't for the life of me understand why Amazon would be down 6% today. And I know that people are pointing to Google's miss on cloud. But Microsoft's cloud numbers were great. And traditionally, from what I've always seen, is that... Oh, and I can turn on my little videotape camera here. Traditionally, what I've always seen is Amazon trade with Microsoft on Microsoft's cloud. I mean, Google Cloud is important, and that's why they're saying Google was down at all, because the Google report wasn't bad. It wasn't great, but it really wasn't bad. It was just that they were light on cloud. Cloud's a very small part of Google's overall business compared to Amazon or Microsoft, but it's a big growing part of the business, and I guess they wanted more out of it. But to sell Amazon down 6% when Microsoft traded as good as it did on those numbers, and Google, which is a smaller part of their business, is a miss, it just makes no sense to me. You know, if Amazon was down a little bit at the end of the day, if Amazon was down 1.5%, okay, a little bit of weakness, just some de-risking into the earnings report, maybe after Google or whatever, people are getting cold feet. But that was a hell of a sell-off in Amazon today. And part of it is, I think also, just looking at this market broadly, is that markets work in feedback cycles. We lost major support levels today. SPYs lost 420 on a closing basis. It's been a really key level that we spent a lot of time talking about. The Qs were really kind of flirting with some of these support levels. You could argue that they lost major support on a closing basis today that they had otherwise been holding. The IWM has just continued to be abysmal. Your average stock on the market is negative on the year. The IWM is negative on the year. TLT is down. So, you know, instead of trying to overly search for a fundamental reason for a QQQ sell-off today or an Amazon sell-off, maybe it's just a technical situation. SPYs lost 420. When you lose support, stock sell-off. People are a little bit, you know, cold feet with earnings after yesterday. But you combine, a little bit of de-risking into some of these other earnings reports after Microsoft and Google yesterday, with the break of key technical levels that, selling leads to more selling in the marketplace. And this is what you get in conjunction with the TLT still being weak, in conjunction with our market dynamic data that Pat was posting earlier, showing that CTAs still broadly have stock to sell into today's trading session. Almost no matter what, there was going to be stock to sell there. So you combine all that together, and it leads to a feedback cycle of selling that created just a nasty intraday downtrend. It's not what I was looking for. What I was looking for was the opposite, honestly. I was dead wrong on my thought process today. I thought Microsoft would hold up. I was not expecting, I said in the morning meeting, I'm not buying Microsoft 350. Microsoft's not a momentum name. I want to see Microsoft digest their earnings. If Microsoft trades into the upper 330s, I'll look to buy that dip. I didn't, just because I had too much on my plate by the time Microsoft actually got down there. Microsoft met expectations for me, but Google didn't. I thought that Google 127 would be a good buying opportunity. I thought that the earnings report was really good. I thought that they would come in and defend the stock today. I thought that they oversold it on just the Google Cloud news being a miss when everything else in the report seemed decent enough, and that thought process was wrong. So they held up Microsoft. They sold off Google. They sold off the market through key support levels, and when you break through support, what is supposed to happen when you lose support? You lose support. It means selling. We had a shakeout of support 2 trading sessions ago. This was a really key trading day a couple sessions ago. It was really an opportunity for bulls to come in and take control. Markets love shakeouts. It's an unfortunate fact because it makes trading really difficult sometimes. So, this shakeout of 420 but close above could really have led to follow through to the upside on the market. And that's what I was looking for. But you don't get that twice usually. The market never should have gotten anywhere near 420 today. Fine. We gapped down a little bit this morning off the open because of the earnings reports or because TLT was down, because the dollar was up. Fine. But the bulls should have came in and bought the gap down immediately today and brought us back down to flat. You start testing 420 again after a shakeout 2 days ago, it's probably not going to be a shakeout twice. It's probably going to be a real move. So at this point, the fact of the matter is the technicals look pretty abysmal here. The SPY 200-day on the big time frame still has an upward slope, which is one thing that bulls can potentially still hang their hat on. Another thing that you could potentially still hang your hat on is just percentage down moves versus, historical down moves in the market. I don't know what we're down on a percentage basis at this point, but, we're probably, if I had to guess, in this 8-9% range. So that's a very typical down move in the market with still a rising 200-day. So there is still a chance for this market to move back up. But the quote that Josh posted, which was like a half joke quote in the VTF, at about 4. I'm trying to type it up. Josh, what was it? What did he say?
Mancini?
Yeah, what did Mancini say? Oh, here it is. I found it. From Mancini for tomorrow. The bull case for tomorrow. There is no bull case until the bulls do something to prove there is one. It's like a joke of a comment, but it's so true. If we are going to get the seasonality push into November and December, which I still think is actually very possible, if the rising 200-day in the SPYs, the rising 200-day in the Qs is still going to be supportive of this market, and we just have to get through some of these further market dynamic sell-offs. Pat saying that the Goldman Sachs tactical flow of funds had the "I'm so bearish, I'm bullish" as well. Quote to it. I still do think that there is an opportunity for this market to be able to move higher into the end of the year, but there's no point in trying to catch a falling knife when we're breaking support levels. There's no point in doing it. and if the TLT continues to sell, or God forbid this UUP gets above 30, then you've got some big problems here that could really further hit down this market. So I can understand and to some degree have a bullish thesis for what the market could do into the end of the year. But if the technicals can't confirm the thesis, there is nothing to do on the long side of the market. And you can't be afraid to take advantage of these very clear downtrending days also. And this was probably my biggest fault for today's trading session. My thought process was so stuck on the shakeout of 420 as being bullish from 2 trading days ago, as we're going into bullish seasonality, where I'm looking for that short-term snapback to 428 in the SPYs, that when the market showed me that it was actually breaking support, I wasn't ready for it. I wasn't game plan for it. I wasn't trying to push to the right side of the market for it. And the intraday price action on it was tricky, because I'm not shorting this trading session here in the first hour of the day. Like, the way you gap down and sell like that, that's a momentum trader's game. I'm really not a big momentum trader like that. It's actually in these heavy moves that I prefer to come in on the other side of the market. And we had a pretty good call here for this bear flag to actually break up at about 10:30, given the time of day, the degree of the sell-off, the fact that we hadn't seen those moving averages yet. So yeah, we lost 420 in that point in the day, but I was focused on the oversold bounce trade given the way we sold off the open and the extension. And the trade was there, we got it. But where I personally think I failed a little bit today, and I usually am not very active around noon, was when we re-lost 420 around noon. When we re-lost 420, it was really telling you that was it. And when we made new lows, it was telling you that was it. And this market just stayed super weak at that point. And again, now we're below some really major support levels. So the fact of the matter is, the market technicals look like trash. The IWM, which I think is more representative of the actual stock market, it's tough because the SPYs are still up 10% or whatever on the year. The Qs are up, 28% on the year, 27% on the year. In my brain, it's actually a red year, because the IWM and the average stock that you want to look at is actually red. So if you start losing these big cap tech stocks, which knows what everybody's talking about, then you'll see the SPYs and the Qs really crumble. It'd be interesting. An interesting thought in my mind, though, is I thought that the real bottom in the stock market for the bear market for 2022 was May. We all know that the actual low was in October, but most stocks that you'll look at, their low was not October, their low was May. But what we got in like the August, September, first half of October period of 2022 was big cap tech actually get hit really hard. And most of the other names that you might want to pay attention to, you could probably even type up an ARC. Let's see. No, ARC's not a good example. ARC made new lows. But for the most part, even if some of these names made new lows, they for the most part were making bases from May to October when all of a sudden big cap tech was actually selling off. So it would be interesting to see some universe where the SPYs and the Qs pull back heavier and the IWM and the average stock actually holds up. But that's a very hard call to make. It's probably not what's going to happen. And, it's really starting to be an abysmal year for the average stock in the market, despite the fact that the Qs are up 27% or whatever still on the year. So we'll see. Maybe Apple, Amazon, Meta are still able to save the stock market to some degree. But Meta is still technically down on the day, even if it's up after hours right now. And like I'm saying, the big picture technicals on this market, the 200-day is still rising, but you got to close below 420 in the SPYs. 4,200 is a super key SPX level. These Qs here are losing support. 350 is really important. They haven't actually lost that yet, but they were losing support in that low 350 area. The IWM is abysmal. The TLT is still very clearly and obviously in a downtrend, even if it saw some relief in the last couple of days. And the dollar is making this bull flag in front of 30, which is very scary. It could fail. I thought that Financial Times article that Pat posted about that 50-cent trader, making a bet on yen strength was super interesting. If he's right, that means that the bull flag and the dollar is going to fail, and that would probably be actually supportive for equities. But we'll see. Brendan, Nvidia is trading down. Dimitri just posted it. The Meta is trimming their capex, so less money going to Nvidia from Meta is what's hitting Nvidia. So yeah, I mean that's really all I got. I actually was able to make money long TQQQ today off that one trade that we kind of called out down here. I was looking for more of a snapback price correction to the ADMA, turned into more of a time correction, but executed well enough to be able to make money. My swings were abysmal. The swing positions that I'm in were abysmal. They hit my P&L really hard today, but it is what it is. I'm game planned for it, and that's what happens sometimes in trading. Though the WeWork, which I took that big position on yesterday when the option flow hit, actually helped my P&L. So go figure. WeWork is by far my best name today, like by far, because every single time option flow hit in WeWork yesterday, I just bought another several thousand more shares, another several thousand more shares, and we saw bull flow hit a whole bunch of times. Then of course the next day, stock today went up to 250 and closed up 10%, was up significantly more than that at one point. So go figure. It's the only thing that slightly helped my P&L. That and maybe this Bank of America actually being green today helped a little bit also. It was interesting what Rock said earlier, and he was right about how some of these names, to me it seemed like the TLT and interest rates hit the market today, but the names that have been getting hit on that, like your utilities, like your staples, they actually were all pretty strong today. And the names that you would actually think of more immediately when you think of rising rates, like non-profitable, long-duration growth stocks, were actually the ones that took the brunt of it, and they took the brunt of it pretty bad. Some of these names were obliterated. ARK down 5% today. Unity down 6.5% today. DraftKings down 6.5% today. Just a lot of those names got totally obliterated. At the same time, they obviously took down big cap tech as well. So yes, that's all I got. Was very much wrong on my thesis today. I failed to adjust properly when we lost that 420 around the noonish period of time, and it cost me a little bit. But can't always be perfect in this business, and risk management is key because we'll be wrong a lot. And that's all I got. So I'm happy to answer any questions that you guys may have. Scrolling up in the VTF, I don't think any questions were actually posted here from Lath. What do you think about the extension, the cues for a snapback? We're not there yet. And this ADMA will roll down a little bit further tomorrow. I think you don't have enough extension yet. I think you need cues probably 346 to be starting to get to the area where extension is getting extreme enough to be thinking the other side. And today was only a day one. I love that buy setup 2 trading sessions ago, because the SPYs got $10 extended away from the ADMA, and it was a day 4 down. That's the type of extension that I love to come in on the other side for. But the Qs at this point are $8 extended. So, they're in the area where I don't like to short because they're getting a little bit too extended. But keep in mind the ADMA is going to move a little bit lower, and it was a day 1. I don't even really like buying day 2s. I want day 3, day 4 with $10 plus worth of extension. So if you're trying to hang your hat on the long side of the market for extension, we just price corrected and time corrected for 2 days, and there's not enough there yet. We need another solid down day tomorrow, and then maybe that sets you up for a buy on Friday or a buy on Monday. From Cyril in the YouTube, Could it be that we fail to retest lows since we rallied too much the first half of the year? Fail to retest lows? I'm not sure what you mean when you say lows. Lows of the year? I mean, so it just comes down to big cap tech. Where is this RSP versus the start of the year? Negative. Yeah. So RSP ETF, which again, equal weighted ETF for the S&P, is negative on the year. So we're as far as I'm concerned, it's a negative year, and we're below the lows of the year. And the only reason why the SPYs and Qs are showing positive is because of a handful of stocks that have really large market caps. This is not a green year. If you have an investment portfolio that has the S&P 493 in it, and you're missing 7 stocks, you are having a really bad year so far. It's not good. IWM I'm starting to hold would be a good thesis, but it needs to prove itself, and the Fed is not helping. Yeah, the IWM needs to prove itself. I 100% agree. And again, I want to have a bullish thesis into this end of the year. I think that there's some positive flows that should be coming in, some positive seasonality, and I can't help but in the back of my mind think that this sell-off is like the final, let's get everybody bearish, let's push everybody out just to set up for this rally into the end of the year. Maybe I'm right, maybe I'm wrong. The technicals have to confirm it. And until the technicals are able to confirm it, there's no real business in being heavy long this market. If you want to be small long the market and be building into some things that have relative strength or good companies or whatever, I can support it. But with the technicals, the SPY is closing below 420. It's very hard to say, this is the spot. 418 today, on the first day after we lost a major support level, I can come in and be a massive buyer and look for the upside. Show me that we get above yesterday's high, and then maybe that's the beginning of a signal. And I'll tell you, let's say, even though it's not looking like this is happening right now, SPYs get back up to the high of the year. SPYs go up to 460 over the course of the next 2 months. It could definitely happen. Took that much time for us to get down here. If the SPYs are going to go to 460, you don't need to be long from 418. You can be long from 422. So let the market prove itself and give that setup if it's going to be there. And the flip side of it is, if we're going to continue to break down, don't be afraid to have a hedged book or have short positions on, or at least take day trades of the short. The way that my brain thinks after the years of my trading, and again, most of my career has been in a bull market, is I like to rent shorts and own longs, is how I describe it. When the market goes down, it can be a very profitable period of time. Those periods of time are usually very fast. So you rent those shorts, and you make money in those fast down moves. And you own your longs because when the long move happens, it's like what we saw in the second half of May, June, and July, where you get that grindy uptrend, and that was actually a pretty fast move. But a lot of times it's that grindy uptrend where you want to have those swings on, you want to let the market continue to trend and grind in your favor. You pay attention to upside extension, or you pay attention to when you get like the vol moving up with the market moving up. Sometimes that's a signal that a top is getting close. But you don't need to be long from 418 right after a break of support in order to be able to capture those moves. You can wait for the market to prove itself. Going back to, again, the quote that Josh said earlier, which is like a joke quote, but is actually pretty solid. So we'll see. Meta today, if it holds up here, it helps. It helps. Amazon tomorrow. I mean, I was chatting with Josh about it a little bit today. Like, the way they're selling this Amazon makes me want to just buy and hold into the earnings report. Like, or I don't have options on right now, but just to buy calls into it. It just doesn't like make sense to me that they sold Amazon the way that they did, and it makes me think that if the report can be decent, that they could really get this thing back into the low mid 130s very quickly. But we'll see, and we'll see what the options are pricing in tomorrow. It's probably going to be pricing in like $9 or whatever is what Pat was saying as of today, but that'll change by tomorrow. Yeah. Brian here saying, I'm astounded at this Google today, down over 10% and still ticking new lows in the after hours. Was the report that bad and I missed something? You and me both. You and me both. I thought the report was just fine. Now, one thing that we certainly know is that when stocks trade really well into earnings reports, and the opposite's also true also, good is oftentimes not good enough. Google has had a heck of a year, was basically at year highs, and working towards, not quite there, but working towards all-time highs when this report hit. So, sometimes just like a decent report means that they will sell the stock off. But to sell it off, 10%, I think I saw it was the worst intraday sell-off since 2020 or something like that, probably since COVID for Google today. Seems extreme to me. And that's why I liked the idea of trying to come in and buy 127. I thought you might be able to buy 127, break opening highs, and get a close at 130, 131 today. Maybe even as a move to 133. And it's like, all right, Google is down 3-4% on an okay earnings report, but the stock was at year highs going into the report, so they sold it off on just an okay report. Like that would have made a lot of sense to me. And I was trying to buy it. I felt I missed the one opportunity to get really heavy. Robo called it out great, back through that 125.50 on the intraday basis. This buy right here on this third bar that he took was great. I was looking at that too. I was just being really conservative, so I never took any real size in it because the only signal that I really liked, I just didn't execute it properly, and then it was not able to break out. We were watching this really closely here between 9:55 and like 10:15 as this EMA was catching up. And I was saying this is a bearish pattern, but let's see if this actually can break to the upside and pull the Qs up with it as well. And it didn't happen. It almost seemed like it wanted to be supportive, and the Qs actually caused Google to break down, which is kind of weird given that Google is the leader today with its earnings report. That's almost what it seemed like at that time. So that was a good call, but it just didn't. It couldn't do it. So really bad day for Google, down over 10% right now. Sick. So we'll see. Meta can help. See what that does tomorrow. And we need Amazon. We need Amazon to come through for the team. I think we have Apple next week. From Michael B in the YouTube. Can you discuss the concept of shakeouts? It's very interesting nowadays. Do you think they are more common than before? Are they due to algos and market makers? So I don't necessarily know if they're more common than before. It's been a thing that I've been seeing for a long time in my trading, pretty much my entire career. The concept behind shakeouts is so basically when you get a shakeout of a level. So this is why we always say that a close above or a close below the level is confirmation and key. If you trade through a level but don't actually close below it, it's like a shakeout. So that's what we had a couple trading sessions ago. We had a break of 420, but a close back above 420. So anyone that's been using 420, which is, we all know is a very key level, as their hard stop loss for their equity portfolio or SPY position or whatever, they get stopped out. And then if the market actually closes back above the level, what does that mean? It actually means it's much easier for the market to move higher. Because the people who were long aren't long anymore. They got pushed out. So what are they going to do? Well, maybe they come back in and they chase price higher. So that's buying. they need to buy back in. That pushes the market up. Or even if they're not buying back in, they're not sellers anymore. Maybe that person who was using 420 as their stop loss and got shaken out would have sold stock at 424 and 428 and 430. But now that person doesn't have the stock to sell. So it makes it easier. More buying can come in and less selling will be able to be there because the market shook out the level already on the downside and pushed people out. So shakeouts are very hard to trade in the moment, but they're very notable. And I do know of successful traders who almost their entire game is based on shakeouts. For me personally, for the most part, I like to keep it simple, stupid. That's what I always say. I try not to overly complicate my trading. I don't think trading needs to be complicated in order for it to be profitable. So I don't like to overly play the game of buying the failed move or selling the failed move. But I do think it's very notable when it happens, and it's one of the reasons why I'm really looking for that follow through for a couple of days after that actually happens. And that's probably why I got caught so flat-footed today. So appreciate the question, Michael B. in the YouTube, and I hope that helps. Yeah, the moving averages catching up yesterday through price helped satisfy the extension that we had a couple days ago that enabled this market to move lower today. And again, today's technically just a day one. We spoke about that right before I left. I remember us talking about how the market works in these multi-day moves, but they reset up when you get a move in the other way. So again, just looking at the SPYs, you had day 1, day 2, day 3. This was a day 4. Day 4 to the downside. I love coming on the opposite side of that trade. But today it's just a day 1. So trying to be long tomorrow, a fundamental event like Meta's earnings report could change things and could get us back above 420 and could erase today's move. But outside of a fundamental event happening, if you're just talking about the pure technicals, tomorrow is really a day that you should not buy. Market broke support today. It's a day 1. We closed below support. Again, a fundamental change could get us back above, but technicals say you don't come in and buy tomorrow. Technicals actually say you should be expecting further follow through to the downside. Whether you should be shorting tomorrow is different. Just because you should expect further downside follow through does not necessarily mean you should short tomorrow. It depends on the degree of extension away from the ADMA. Because I don't like shorting markets that are $6 plus extended in the SPYs or Qs because it just tends to be a bad risk reward, even if we can continue to go lower. So that might mean that tomorrow, if we're $6 plus extended from the ADMA and the SPYs and the Qs, I can't come in and buy it because it's a day 2. We should continue to go down, but I don't want to short it either because I have a bad risk reward at that degree of extension. So we'll see. Sorry. Had a cold while I was in Africa, which sucked. To be a little bit sick when I was there. I'm pretty much over it, but I have a slight cough.
COVID.
It's not COVID. Negative. I tested myself. I'm negative. If it was COVID, I would have been over it by now. Tomorrow, short-term tactical will be in the green again. Yeah, so that's another reason. Again, short-term tactical in the green does not mean to buy. It means don't short. That's what that means to me. So we'll assess that in the morning. All right, gang. 5 o'clock. Brutal day today on Wall Street. Bloody day, unless you're a long we work. Have a great night. I'll see you all tomorrow.